So now let us today in this lecture we are discussing the five strategies for the intraday trading so that you can make a huge profit. So these five intraday trading strategies I am going to explain you that will help you to make a profitable investment. So I am starting from the intraday trading. So what is the intraday trading? So intraday trading is a day trading that we can make a profit from the small interval of time, say in one day. So in one day we can make a profit by investing for the few amount of time. So we can spend on for the, let's say, for 1 hour, 15 minutes, 5 minutes. So it's depend upon the number of trades we are doing in one day. So the intraday trading strategy is a very powerful strategy that will let you make a huge amount of profit. But on the other hand, there is also the chances that the day traders are mostly fall into the trap of the losses. So according to the survey, in the intraday trading, 90% of the people find themselves in the loss. So only 10% are able to success. So my motive is to keep you in the 10% that you can avoid that losses, and how you can make your strategy more successful to make you a huge amount of profit. So this strategy number one. So the strategy number one is high and low strategy. So in this strategy, the momentum of the trend. So if you see the trend so basically the high and low strategy is the comparison of the previous low and current high. So in yesterday's, if there is a the opening price, let's say 100 rupees, and now the opening price is 102. So the opening price is, the open is high as compared to the previous day. So in that cases, the sellers are going to very active, and they bring the price down. So you need to understand that the price is open or high. If the price is open at high, then you need to wait for 15 minutes to wait for the momentum. So if the price is high, then never trade. So I basically recommend you to that. Do not spend your time for that stock. Find the next stock and see whether the price is open high or low. So the strategy, first strategy is to find the open or high position. So if the position is high, then you should have to skip the trade, or you should have to find the another way to trade. So second one is the high and low. So when the stock market is open, you are seeing that the stock, you are seeing that previously it was high, but now it is low. So if it's low for the 15 minutes after the market is open, then definitely there is a downfall. It is the highest down price of that day, and definitely you should make a move and buy the stock. It will definitely make you profit. So this strategy number one: avoid the openings that is high. Invest when the opening price is low. Wait for the 15 minutes. If the price remains low for the 15 minutes, then you need to recognize that this is the lowest point of that price, and you should have to make a move and buy that stock. So this is the first strategy. Strategy number two is the breakout strategy. So in this breakout strategy, there is a break of the prices. So if you see the 44 moving average, so the 44 moving average, the trend of the graph is like this, and when you see that the prices, the graph is moving from this average line, the graph start moving upward. So you can set the time period for the 5 days, 1 day to the month. So in that 1 day to the month, that you can find that the graph is continuously moving in uptrend direction, then there is a chances that this trend may carry on the next couple of days. So in this way you can identify that the moving is uptrend and there is a breakthrough of this trend. So you can find the best position and make the move and buy the stock and set the targets. But in this case, do not forget to set the sell prices. So this was the strategy number two, and strategy number three is moving average strategy. So in this strategy, basically, I recommend you to set the 44 or 50 moving average, that trend. So in the 50 moving average, the accuracy is I will say that 70 to 80% that you will set the 50 moving average. So in that 50 moving average, you can see that the trend line is 44 or the 50, and the graph is like uptrend, and then there is some laggish movements happen in between the stock. So in this meanwhile, if you see these charts by applying the time frame of 5 minutes, say, or to 15 minutes, you need to find this where the lag is. If suppose in the opening in the market there is a formation of this trend, so in the 44 moving average there was a uptrend, the moment happened, and then suddenly there is a slag. The prices has fallen down because of when the moving the prices of the commodity, buyers are active, but there is some limit. So buyers, there might be some news in the stock market, or uh, some some sellers becomes active that they need to sell at the moving prices. They think that no, there is no further time to wait because the price may fall from that position. So the sellers start active because when the price move to the certain extent, then this price is going to sell. So you need to identify whether the uptrend, there is a 44 moving average. You need to find during the uptrend where is the pitfall, where is the line that comes down, and then you need to settle your position on that point, and then you need to buy. Then suddenly there will be a uptrend moment. So in this 41 moving average, the concept is like that. The moment happened like that, the upward trend follows the downward, then upward trend. So in that point, so basically you need to understand where is the downfall, and you need to invest on that point. So that is in that way you can make a profit when the price moves in upward direction. So that was about the moving average. Then the final, there is a momentum trading. So in the momentum trading, you can see that there is a sudden spike of the Nifty 50. There is a sudden spike of the prices that will let the Nifty moves in the positive direction. So once you see that the Nifty is moving in the positive direction, and there is a strong sentiments in the market, the news is positive, the buyers are active, there is no selling happening around the stocks, the global indexes are becomes a green. So in that point, you need to understand where I need to settle my position. So in this strategy, so in the momentum strategy, the basic thing is that you need to identify the momentum of the market. So in the momentum strategy, let take an example. There is a trend like swings happening in the stock. Suppose let's say there is a volatile stock, and then it's moved from the upward, then it's let come down again, and then at the bottom again it will trend. So and after that the stock remains in the uptrend for the couple of days. So that stock, it means that this is the momentum stock. So you need to identify that momentum stock, and you need to find the baseline where the stocks came down and it will move further. So you need to identify the average number of stocks that move, that price has been fallen down, and suddenly there is a spike. So you need to identify the minimum threshold of that point. So minimum threshold is that, let's take an example of certain XYZ company stock that continuously downfall at the 100 when the price becomes 100 rupees, and from that 100 rupees suddenly it spiked to 110, 110, 120. So that 100 rupees, that point might be the trigger point that led you to buy. So you need to identify and make your positions, make your moves to buy that stock. So in the addition, I would like to recommend you the strategy you need to implement in the intraday trading when you are a beginner, you are the learning in the intraday. So the strategy number one: do not invest when you are beginner. So my basic appeal to you is that to learn as much as possible. If you do not have to greedy so much to make a profit, so you think that, oh no, the trend is a downfall, no, I need to invest. So blindly do not do this. I recommend you to learn first, to learn what is the intraday, to learn the every concept of the intraday, the stock market. After gaining some confidence, then you can make your move. My second tip is that to not depend upon the calls or the third person that will let you call you the friend or friend. This is the XYZ company. Uh, you need to make the target price of this. You need to buy and make the stop losses. So do not do that. Do not depend upon the third person. Invest upon your own decision, your own risk. Stand upon your own, because you are the one that you make the profit or loss, not the third one. So my humble opinion, appeal to you that please do not depend upon the another's call. Invest based on your own thought process and your own knowledge. And my next bonus tip is that uh, to acknowledge the news, because in the internet trading is much it's much what can I say, it's derived by the news. So there is a volatility happens when any news will come. So if there is any bad news or any rate hikes or any if the federal has increased the rate hikes, or there is a there is some news of the recession comes, then the stock market will flash and it will down for the day. So you need to keep watch on the news. Plus you need to keep eye on the global index, whether the global index are performing well, whether they are in the green. So you need to keep an eye on this global index as well. So in this way you can make the profit in the stock market. And I hope this video is helpful for you. So comment me below on the next topic, which next topic do you want to know more about. So my planning is to make more videos related to stock market, and my next target is to help you in the fundamental analysis. So keep watching my video and please subscribe. Thank you.